We've also invested in a lot of other things. We've looked at other asset classes, but we also get that as operators and as investors, there are plenty of asset classes that we don't get involved in. An investor with a diverse portfolio, you got to be involved in different things. You can't be all in one thing. And I've advised many folks that do actively invest with DeRosa, or those that are our students, that you can't have all your eggs in one basket. You cannot. You really need to be exposed to different things. And an asset class that really is different enough, in some ways a great complement to multifamily syndications. You also get cash flow, you get all those things, but you've got a little less control because you're investing in something that needs to have someone else behind the driver's seat for you. That could be a 200-unit apartment building. Well, I get it. If you've got a day job or if you've got other things going on, you don't want to be running that 200 unit by yourself. That you also don't have as control. So you can't really sell your shares when you want. The asset class I'm referring to is turnkey rentals. So we're super excited that DeRosa has a partnership forged with a company called Rent to Retirement, and they're, best in class, as I'd like to say DeRosa is as well. They're best in class operator and provider of turnkey opportunities. So super stoked to be with you guys today with the founder and CEO of Rent to Retirement, Zac LeMaster.
Guys, thanks so much for bringing me in.
Zac, can you tell us a little bit, like, what is a turnkey rental, if you had to define it just for the layman out there?
Yeah, turnkey is one of these buzzwords as well that we hear thrown out. And so I always want to define what we mean when we say turnkey. And so turnkey to us at Rent to Retirement means a property that's located in a market that we've identified to be a healthy and productive market for sustainability long term. We want to be invested in areas that have landlord-friendly legislation, low taxes, population, economic growth, make sure that the rent numbers make sense for cash flow long term, areas that have a diversity of industries. But anyways, when we talk about turnkey, this is a property that's newly built or fully renovated, leased, and professionally managed by one of our local teams in this area, where an investor can come in and own that property without having to create their own team from the ground up. And the idea is for someone to easily scale or diversify or get started investing in real estate, actually owning physical real estate, kind of following this process and tapping into these systems. We operate with single family. We do have some multifamily and new construction. And
those that are considering investing, what is the typical profile?
And we get a whole diversity, because I think turnkey can be a great avenue, Matt, to fulfill, that area of your investing. Most people are investing, as you mentioned earlier, having a diversified portfolio. Most people are investing in multiple asset classes, and we encourage the same thing. It's important to own multiple asset classes and, in my opinion, multiple locations as well. But generally speaking, I think the people that benefit from turnkey and that we work with are either people that want to get started owning their first property. They've never bought a property and they just want some hand holding, or they want to be completely passive, right? I mean, we use that term loosely, completely. I mean, you still need to manage your manager, but these are people that, they have their W-2 profession, they make good income, they like the benefits of owning rental real estate. But we also have people that are very active investors too, that flip houses, or real estate professionals that use turnkey as a great way to tap into a new market where they see opportunity, but they don't have the time to build their own team from the ground up. So people that want to scale quicker or diversify into some of these other markets. That's kind of the general gamut of people we assist.
Piggyback onto that. I mean, one thing we offer with syndications, which I know is available in turnkeys as well, is if somebody's a active real estate investor, like a flipper or a wholesaler or whatever it is. Unfortunately, I mean, flipping's great. I've flipped my share of houses and I've done a few wholesale deals, and those are phenomenal, but they are very, very heavily taxed because it's all capital gains, right? And so a great way to shelter some of those capital gains is to invest in a long-term rental like a turnkey, because turnkeys, can provide depreciation losses. You can still participate in cost segregation studies and those kinds of things to show the IRS a legal negative loss. This property lost money, and that loss can wash out some of my gains elsewhere.
100%. I mean, that's exactly what we do. What all of us do, right? Is you have your active income, and if you're an RE pro or just looking for additional tax benefits, put it into a property that's already stabilized and can provide that for you. That doesn't take up a ton of your time. I mean, the same thing with us. Even though we're heavily in the turnkey space, I mean, we buy just a lot of stabilized assets as well, simply for the tax purpose. So it's a great complement.
Your company has vetted markets, vetted operators that you're working with, right? So like what I like about Rent to Retirement, maybe you can comment on how the structure works, is that when I am working with you, I'm not just working with the Rent to Retirement staff. I'm working with operators that are boots on the ground in markets across the United States.
Yeah, you have to have your local team, right? It all boils down to having people that are there, hands-on, that are going to make sure the investment is going to be successful or have the highest probability of being successful. And again, Matt, this is just following the same process that we've done over time, building our own team in these areas. And so the first thing we do is identify a market. And once we identify a market, and this is on a macro and microeconomic scale, so areas that we want to invest, but also like specifically where, we have people attending city planning meetings every month to say, okay, where's the transportation, the job growth? Those are areas we want to be in the path of progress. And then we establish teams. There are teams that are either rehabbers or builders, property managers. Obviously, that's a huge key point. We personally invest with these teams and vet them and make sure we have a very strict standard that they need to follow to be part of our network. We accept less than 3% of people that, providers and partners that want to be a part of our network. And we also have some internal stuff. We also are building and rehabbing some of our own internal stuff, but it's just following that same process to make sure when an investor comes through our network, they have the confidence that, hey, this has there's a track record established here, but they have a high propensity for success. But really, the goal with our company, Rent to Retirement, is to assist people in building a comprehensive approach. I'm sure you could agree completely that when you're investing in real estate to any capacity, you're operating a business, even if you have one rental, and you need to really approach it that way. There's all these ancillary things that come alongside with building a really successful, sustainable business, from the tax, the legal. You need to have the right CPA, attorney, insurance provider, lender. And so we take this comprehensive approach with the network that we've built that has allowed us to be successful, and we share that with our community to whatever capacity that they need. I mean, I approach real estate as it's a lifelong journey, and you really need to make sure that you're working with the right people and building that team. As you mentioned earlier about the conference, Go Abundance, about building that foolproof team, because that's how you build a sustainable model long term, and that's how we approach it.
So with that business in place, the active investor that has the turnkey rental, what's their engagement like now that they have the property management on team, site on staff, and they have people helping them fill vacancies and that sort of stuff? What type of engagement do they need to maintain to manage a property?
Yeah, I think that the most involvement, at least what we encourage, is in the very beginning. I mean, it's important to understand what you're investing in, understand the market, understand why, what is your criteria and why are you investing in this location, and make sure that's congruent with your goals. So going through the due diligence and the financing process, property selection, I mean, we're intricately involved with our investors to do that. The idea is once they own the property and it's stabilized with the local team, though, it should be fairly hands-off. Have an identified or a specific point of contact on property management that is providing the monthly reports to you and keeping you up to speed. I always tell people that you should be educated on how your properties be performing, and you can check in with your manager as much as you need to. But the idea is that it's self-sustainable, right? So you're not taking off a ton of your time with managing these properties. It is important to be conscious and aware of how the management is performing. That's a huge thing in any investment that you have. But really the idea is meant to be where you buy it, it's stabilized, and then you can continue to focus on growing your business over time. So it's very minimal. I would say maybe a couple hours, 2 to 4 hours a month, really just reviewing reports, making sure you understand how the property management is operating, and then focusing on really your business from there.
The owners obtaining financing, that's something you guys are helping them figure out.
Yeah, and it's up to the investor. It really, again, depends what their goals are. So the first thing we want to do with anyone that's interested to learn more about these markets or turnkey investing in general is we have a consultation with them. We want to learn about what their goals and criteria, what their financing and financial position is, because we have a lot of people that are investing through a self-directed IRA and they need non-recourse lending. If they're using a retirement vehicle, or if they can't qualify for conventional lending and they need non-QM money or something like that, private money is available as well. So it's really up to the investor and what their goals are. But we have a huge network of lenders that can offer all types of financing depending on their goals.
When they make a decision to get into turnkeys, is there anything that they should have in place, coming to you guys? Or are there any expectations they should go in with?
Probably not, actually, Vinny, just because there's a whole gamut of different people. And I think it just really depends, how do you see this type of investment fitting into your overall goals in your portfolio? If this is a scenario where you do want to tap into new markets, then that could be an easy way for you to do that, or just learn about new markets. If you're a newer investor and just need a lot of handholding throughout the entire process, we spend a significant amount of time with people just mapping out their goals and making sure that there's an opportunity. One argument against going turnkey, there's no potential value add, right? Like you're buying a property at market value, and that would probably be true in most cases. And I would even stretch that to say, especially over the past few years, that usually, if you're buying a property even off the MLS, or really, you're really probably not going to get a huge discount on that unless it's a really dilapidated or underperforming asset. But you're really looking at this long term, right? This is a long-term play where you have a stabilized asset. you take the tax advantages, you look at rental increase over time, you run the cash flow numbers to make sure they make sense for you, and you're looking at this as a way to really grow your wealth long term. But that being said, we do have some creative opportunities, especially right now in the new construction space where, and this is where I'm personally the most active, in markets where you can come into a new construction opportunity where there is immediate equity and things like this, where you can potentially do a cash out refi sooner or even sell that property in the future for a gain and 1031 it. And so there's a lot of unique opportunities like that are available just based on where the market is. And so like one of our most active markets is, as Matt mentioned earlier, is Florida. We work throughout the entire state of Florida, and there's a lot of opportunity right now.
What are the markets that you guys really like in the US? Because I'm sure, I know you're not investing everywhere, right? There's markets you like and markets you don't, right? So tell us some of the markets that you guys are really, really excited about and why. Like, tell me what, and then give me like a few reasons as to why these markets are great.
Sure. Yeah. So we've invested in the Midwest for a long time. This is really your bread and butter, just, B class, $150,000 to $200,000 house. That's just going to be predictable cash flow, very recession proof type of asset. Maybe you get a 10 to 15% cash on cash return, depending on your financing your use. So that's kind of your bread and butter. But really where we're most active right now is probably in the Southeast. So this would be areas like Texas, Alabama, Florida, some of these areas where there's a huge population shift. And this is where it gets exciting to me because you can come into a property with potentially immediate equity. You have positive cash flow, but really you're looking at the long term, right? This is something where there's a huge shortage of housing and it's not getting any better. And so This is where we see appreciation and rents going up time and time again. Specifically in Florida, we're very active in Southwest Florida. So like Northport, Port Charlotte, Cape Coral, more like Central Florida surrounding Orlando. You mentioned Ocala, also in Polk County, like Haines and Point Siena. We look a lot right now at secondary markets outside of metropolitan areas. So as they become more expensive, like areas or areas like Orlando, there's a lot of secondary markets like Point Siena and Polk County where it's still 45 minutes to an hour commutable, but man, the price point is just a fraction of what it would be in Orlando and less tax. So there's a lot of opportunity in those secondary markets. We also like the Panhandle, so Pensacola area, a lot of military bases up there and stabilized rentals. So that's kind of where we're focusing right now in the general areas that we like.
I want to take Zac off the hot seat for a second and put Matt back on the hot seat.
Oh, no.
I'm hoping you can elaborate just how does the partnership with Rent to Retirement tie into our mission of transforming lives to real estate?
If I founded a company, dedicated to transforming lives to real estate, I believe that diversity is the way to achieve financial freedom. Strategic diversity and in a few different asset classes. Big real estate believer, maybe not all in multifamily. And I like, as I said, residential housing overall. I believe that residential housing, as we look at what's happened to interest rates, Vinny, I mean, interest rates have gone way up. A home buyer may not be able to afford a home for the foreseeable future. Qualified home buyer may be having to wait. Rising rate environment has probably pushed back the dream of home ownership for a lot of people. And so if you've got a young family, maybe young kids, whatever it is, and maybe a family that's large enough that they really don't want to go live in a 2-bedroom in one of our apartment buildings, and that's okay. Maybe they need to and can't afford to live in a home. And maybe they're a little more nimble, moving around, that kind of thing. And that's where an organization like Rent to Retirement comes in, where they can provide a great housing solution for that family. I believe turnkey serves the needs of a lot of America's housing needs. And so we need good quality housing solutions for people. And that's why we like Rent to Retirement, because they're providing good quality housing solutions, providing a good return for our investors, which we believe they should get, whether it's in our products or not. It's also providing a service that's needed. We're going to need a roof over our head for as far as I can remember. That needs to be provided by organizations like DeRosa Group and Rent to Retirement. I believe that passive real estate investments outside of Wall Street should be available to all people. Unfortunately, because of what DeRosa Group offers, because it's regulated by the SEC, and because it is aggregating pools of investors into large apartment complexes and that kind of thing, there are many, many rules around who can invest and what we can do to communicate with those investors to make them aware of that offering. And that's not my rule. That's the SEC's rule. I hate that rule. I wish that everybody could do what we do. But what's great about Rent to Retirement is that if you are not accredited yet, you can invest through Rent to Retirement, and be accredited or not, doesn't matter, right? Because it's not a syndication. It's not a security. You're buying a home. That's what you're buying. You are buying a house, and Rent to Retirement is helping you do it. And so you're not buying a share of equity in a large apartment complex that DeRosa can offer you, you're buying a home and you can sell it when you want, refinance it when you want, got a lot of control. It's actually a great training ground to learn more about real estate investing. So for those of you guys that want to learn a bit about real estate investing, it's a great hands-on approach to do deals, maybe in markets that you don't live near, and you want to work with an A+ operator that already operates quite a bit in that market. I think we've spoken a lot to the potential passive investor that looking for capital to place. A lot of folks that pay attention to the DeRosa group are operators like we are in that. So I wanted to put out some thoughts from you, Zac. Let's say someone is, they've got a portfolio of properties in Albuquerque, New Mexico, and they want to approach rent to retirement and listen, I'm an A-class operator. I think Albuquerque is amazing. What should they scale up to? What makes an A-class operator A-class in your eyes? Assuming they're in a market you like, what are some things that you think that you need to see from the operators that you guys work with?
Yeah, that's a great question. I love that. So typically in our vetting process, one, you have to be in a market that we see potential in, right? And then I think I already went through some of those things. But if you are interested to explore this further, I mean, reach out, let's have a conversation. The first thing I always do is, let's fly down, meet in person, and let me personally invest with you, right? Let me join your organization on a personal level with some investment properties and partner with you on some stuff to see how the operations turn out internally. Because as much, and I've just learned this over the years, that while everything can look really good on paper, you don't really truly know until you're partnered with someone and you have some like firsthand experience.
It's great to know.
And that goes with everything, management, that goes with just the rehab quality or the building quality. So that is an expectation. And other than that, I mean, we're going to go through a strict vetting process. We need to look at you don't have to do management in-house, but we do need a very thorough property management team in place. And we need them to adopt a lot of standards. What is their tenant vetting process? Do they take 3 times monthly rent? Are they qualifying? Are they calling references, not just their current landlord, but previous landlords that may not want to, that the first landlord could just say whatever to get rid of them? What is their income like? So the vetting on the management side, on the rehab or the building side, like what is the quality? What type of property? What neighborhood classes are you in? I could go on and on. This could be an hour discussion, but it's really a pretty strict vetting process. Not to say that it's unrealistic, but I'd be happy to speak to anyone that's interested in. And it's probably about a 2 or 3 month process where we just have to have some firsthand knowledge of how the operations. But hey, if you're in a great market and there's potential for upside there, then let's have a conversation. Let's talk about it. And
it's understandable. You as an organization and even you personally are the first investor. And I think that's good to know. You got your money where your mouth is, air quote, right? If you're presenting Ocala, Florida to investors, it's because you've already vetted it. That's a big integrity check that I really like to, that's really great to highlight, make sure people heard you say.
Yeah, thank you for that, Matt. And in addition to that, there's a lot of different ways we can partner with local teams too. For example, once we do have a track record established and we see productivity and those standards being met, a lot of times we'll come in and be a private lender and we'll fund some of those deals, right? Or we'll do the ground up construction with them. And so that the sky's the limit once we have a good foundation established.
So
that's awesome. Awesome. Well, Zac, thank you. As DeRosaGroup.com/RTR. If you guys want to hear more about rent to retirement, and that'll take you guys through the partnership portal we have with rent to retirement. DeRosa Group does not partner with organizations very regularly. And so I want you guys to take it to heart. The fact that DeRosa has been willing to take on this relationship and partnership means that it's something that we hold near and dear and we vetted in that. So if you guys are considering diversifying a little bit, I understand this is something that we've thought long and hard about as a company. And it's really, we're excited to offer this up to you guys. So check out DeRosaGroup.com/RTR to hear more. Zac, people want to hear from you personally or want to connect with you. How would they do that?
I would encourage them still to just go through that link. Of course, they can check out the website, but that's got links to all social media. We try to put out a lot of content as far as education, really about all things real estate, right? Not just turnkey. We have our hands in a lot of different stuff, and we just love what you guys are doing over at DeRosa, Matt. I mean, there's a lot of same thing for us, right? We're not just doing this just because. I mean, our synergies and our integrity and philosophies align. You and I have been on stage together, and we're part of also other communities as well. And just sharing that, I think, with good operators in the space, I mean, and aligning in those goals is super important. And just providing excellent investment opportunities and helping people transform their lives through real estate. I love that.
Sweet.